What's going on, guys? Happy Sunday. So today we're actually going to walk through the income that I made in October. So it's your November dividend update here. And of course, hopefully be recording about 3-4 videos today, hopefully. So if you guys see me wearing the same shirt in the next couple videos, that's what it is. So hopefully today we'll be covering actual dividend income for the month of October. We'll also be touching the 10 largest stocks in terms of value in my portfolio, not necessarily stocks either. It could be things like fundrise or something of the like. And then also I want to touch into the 10 highest dividend payers in my portfolio as well. And then I also want to touch on, I forgot what the fourth one is, but I'll probably hopefully remember by the time I actually go to record it. So if you guys like the intense debate that me and Kyle are going on in the background, make sure you subscribe to our Passive Income Educator channel where we actually do live streams every single Friday. Please do that. We're hoping to get to 1,000 subscribers by the end of the year so that we can provide more and more money back into the channel and provide more content back to you guys and continue to provide you guys with that value that you guys so desperately need. So also, if you guys haven't already, I also do some blog posts specifically going into more about the breakdown and the percentages of every single one of my monthly updates with respect to dividends. I have July in there. Kyle's should be posting August and September rather quickly. And then I'm gonna write after I do these couple videos here, the one for October, so you can understand what percentage breakdown comes from options, what percentage breakdown comes from dividends, what percentage comes from Shopify, what percentage comes from YouTube. So I don't necessarily break that down in these videos just because it requires a little bit more mathematics and I can't really do that on the fly. As you guys know, I'm not that good at math if you watched my last video. So at this point, you're probably hopping over into the computer screen and we're just gonna hop right into the actual dividend portfolio itself. So that being said, we're at about $550-ish thousand. We did have a couple percentage point drop in the market last week. And I expect that volatility in the market to kind of continue as we go into elections next week. And obviously, I don't think we'll have the results on Tuesday night. So I believe we'll probably have some volatility in the markets for the next couple weeks until we find out exactly who the president is. And with that, we have about a 4.4% dividend yield on that dividend specific portfolio, which is around $388,000. And that gets us around $17,000 in dividends, which is not bad. But I think the highlight for this video isn't going to be the dividends, although the dividends are good, and the dividends are what I'm planning on my financial independence and future on. I think what is going to be the most highlighted piece today is the options income. So normally I generally jump into the capital allocation by sector and the income by sector, but I generally think that people's eyes gloss over at that point. So let's just kind of hop into the actual money that I made from dividend investing and things of the like. So we still are on track for our goal of $14,000 in terms of dividend income for the year of 2020. And we're closing in on about $39,000 for just total income coming from non-W-2 sort of sources. So my non-9-to-5 sort of jobs. That could be dividend income, that could be Shopify income, YouTube, as well as options income. And when I talk about some of this options income, some of it is realized and some of it is unrealized at the moment. But the thing with the way I sell my options is I'm selling options, I'm not buying them. And so what that means is I'm getting the money directly into my pocket as soon as I sell that option. So technically at the moment, I have whatever options income you'll see in the moment in my pocketbook. Now, if I decide to close out that option, I will have to come out of pocket to be able to do that. But at the same time, you could say the reverse. I have that money kind of hitting my cash register at the moment. I have been credited that money. And in order to go the opposite direction and buy back some of those options, if I decide to do so, it would be a debit from my account. So you could end up in the future, not to say that it's going to happen, I don't anticipate that it will, but in the future, you could end up with a situation where some months for my options income could be negative, depending on if I continue to have to buy back some of these options and roll them out. I don't anticipate that ever happening because I kind of know what I'm doing at this point, but you never know. I did think about making a trolling video where I said I wiped my entire account. I still might do that because I've had a lot of people, not a lot of people, but a minority of people that don't understand how to utilize options for what they're worth, and they've been scared. Maybe they've been burned in the past, as I have, and I was scared to kind of incorporate options back into my strategy. But now that I kind of understand how to utilize the tools and what I'm looking for the tools to do, it's a lot easier. And so I think that is the main difference. As I mature into an investor, I can look at the tools at hand within the stock market, within the derivatives market, within real estate, and understand how to utilize those tools best to kind of continue my portfolio going forward. So overall, for the month of October, it's an outlier year, or outlier month for the year for sure. It's actually encompassed about a third of the money that I've made in 2020 in terms of non-W2 income, and a lot of that comes from options. So we made about $12,492 in the month of October just from options income, Shopify income, YouTube income, but the most of it is coming from options income, which you'll see here. $1,153 is coming from dividends. We did have a smaller month in YouTube by $320. And I think a lot of that has to do with the fact that I haven't put out as many videos. And then you do have some Shopify income, which is continuing to go down as well. And this is incorporated into two different portfolios. This is the tracker that you can buy on chartmaster.com. So if you haven't seen some of those videos, make sure you check that out, where you basically can get your forecasted dividends in a chart like this. Basically, you just input the symbol and it's basically forecasting out by month what you want it to be. There's actually formulas in here as well. You could steal those if you want to make your own, but it's a little bit more difficult than just looking at the formula. There's some back coding that you need to do as well. And then we also have the membership that we offer at passiveincomeeducator.com. Allows you to get some WhatsApp group, personal one-on-one time with me and Kyle. So, and that's generally pretty cheap. It's like $3 to $6 Canadian, which is basically free for US folks, or it's $3 to $6 Canadian for you Canadian folks. So anyway, let's just hop right into the dividend pairs, and then we'll touch a little bit more about the options income. But like I said, the majority of the money is coming from options this month, and I need to find a better way to track my options. I'm good at tracking the credit and the debit that comes in and out of the portfolio, but not so much the actual strike prices and the amount of contracts and things of the like, which would help me understanding my rate of returns on the positions that I'm taking within the portfolio. So actually hopping into October's income for dividends, we're looking at about $12,500 in terms of total income, but in dividends, about $1,150. So 34 of that came from GEO Group. $90.82 is coming from JP Morgan. Now this actually shows up in November, but they said October 31st was the actual dividend date, so I'm counting it for October. And Main Street Capital is about $30. Altria Group has now jumped up to $358 a quarter, which is pretty wild. I think that's probably one of my bigger ones that you'll see in a couple other videos. You have Realty Income, which is $100 sort of dividend there, and excited about that one hitting $100. $24 coming from Stag Industrial, $34 coming from Starwood, which is actually a company that I sold and consolidated that into Pepsi. So yes, I will take a dividend hit from that, but I believe in Pepsi's dividend long term, and I wanted to kind of remove some of my obligation to real estate as I continue to do fundrise and other things. It didn't make sense to continue into Starwood Property Trust. Not that I don't trust their dividend or anything along the like, but just wanted to just move more money into Pepsi, and I really want to get Pepsi up to 200 shares. So maybe it's a weird little goal, but it is what it is. Cyrus One, $39, and you had Main Street Capital in the Roth IRA, which is $32, almost $33 there. You have Philip Morris, $120. Excited about that one. And then you have WP Carey, which is a Realty Income lookalike, except it doesn't pay monthly, it pays on a quarterly basis. And that paid me $104. So the thing that I'm liking about these is you're starting to see a lot of three-digit sort of, or three-figure dividend payments coming in, which is awesome. I'm just looking forward to now when you have more of these three-figure payments coming in, you start getting to the point where you have these four-digit payments coming in either on a quarterly or monthly basis. And that's kind of like where I want to get to in the near future. So as we start getting to the $25,000 to $40,000 dividends a year sort of point, I'm hoping that we can get some of those bad boys that are like really good with the four-digit dividend payments. QYLD, getting that up a monthly to $34, so expect that to jump up to the 90s next month, and then because we have about $9,000 in there at the moment. You have more Altria Group at $24 in the computer shares account there. You have more Philip Morris in the computer shares account at about $25, and you have Realty Income as well, 127 cents, we'll say, so I can correct myself. I was gonna say dollars, but it's cents there. Fundrise paid me a $43 dividend, which was up from Q2, which was a $21 dividend. So part of that obviously is due to the fact that I was investing more money into Fundrise, but part of it I think was the pandemic kind of coming back to normal and being able to normalize those dividend payments, where I think they kind of held some of them for excess cash in Q2. Now they're getting back to normal. So this $43, almost $44 payment is the largest I've had from Fundrise, and I hope to continue to see that grow in the future. We did mention that the dividend payment coming from Cardone Capital went from $56 to $50, and I think a lot of that had to do with the incentives that they were giving folks during the pandemic times to make sure that they stayed in the apartments. So they much rather have the tenants in there and lose a little bit of dividend income or just income in general than have vacant apartments, and I agree 100%. And so I think in that year or two, it'll normalize back up to 56 or even more than that as we continue to raise rents in the future. And then you have some website savings where I have my personal savings, 313 cents and 39 cents or whatever for my personal savings. This was basically depleted because I basically moved back and I just wanted to make sure I had some excess money in my checking account as I buy furniture and things of the like the TV you see in the background and the apartment, just as I get settled for the next month or two, and then hopefully you'll see this personal savings kind of jump back up in the future. Now, what you'll see here is the options income for the month of October. So first things I want to note is you'll see that I had about $17,800 in credits due to me, and then I had about $7,000 or so in debits that I had to pay in order to either roll some of these options or to buy back some of these options. So of course you can buy back some of these options early if you say capture 80-90% of the premium value within the first week or first couple days. Doesn't necessarily make sense for you to wait and hold up that capital. Let's say it's $10,000 for another week or two when you will only make another 10% rate of return on maximum. So what you can do is buy back and pay that 10% premium back to whoever was willing to buy it, and eliminate your risk entirely and restart from scratch. Maybe go out another week, another 2 weeks, and kind of put that money back to work. So you basically are able to capture the majority of the options value relatively quickly. But like I said, with that, you end up with a lot of trades. So on here, you'll see we've had a lot of buys and sells to be able to get them out. And we have a lot of covered calls here that I've kind of wrote over the last day or so. So this ended up being a pretty good chunk of change here just from being able to do that and re-up some of those covered calls. So a lot of those covered calls are on like Caterpillar, Pepsi, Johnson & Johnson, JP Morgan, AT&T, Wells Fargo, AbbVie. And I think for the most of the month, I was actually concentrating heavily on cash secured puts, which you guys know about. And I kind of let the ball go on some of those. So I had a lot of activity in a lot of stocks just kind of sitting there without any action on them in terms of the option space. And it's free money at that point. I mean, if you're able to write conservative options, the likelihood that it's going to get called away is very low. And if you are paying attention to them, which for me, now I know a lot of the expiry dates for this is next Friday. So if I'm paying attention next Wednesday, Thursday, after the elections start to come in, depending on what happens with the market, I could either buy back some of these, which I continue to believe that the market will go down. So in this sort of market, covered calls is probably optimal. With uncertainty, most likely the market sentiment will drive the market down lower. And so I could buy back a lot of these, eliminate the risk that it could potentially swing upwards and go in the money, where I'd actually have to sell the shares or roll the shares or roll the contracts to be able to maintain ownership of my shares. So anyway, I need to figure out a better way to show these particular
options, because right now it's kind of just like, hey, here's an option, cash secured put that I sold on AT&T. Here's the total credit. Is it closed? Is it open? So I know that Randy from Retire with Options has a really good tracker, and I know Dave from Hidden Freedom Investing also has a good tracker that I might try to copycat with them, and hopefully be able to give you guys a little bit more granularity, because obviously $10,000 worth of options income is a big chunk of the money this month, and it's also a big chunk of the 2020 income coming this month as well. So I did remember what that fourth video that I wanted to touch on was, and it has a lot to do with this. And I think what it is hopefully you guys will stick around for it. Hopefully you guys are interested in seeing it. So if you haven't already, hit that subscribe button. But what I really want to touch on is my strategy going forward. And it doesn't necessarily mean that if I'm making $45,000 in options a month that I'm going to quit my job. It might help accelerate that. But anyway, I'll touch on it more in the video. So make sure you guys have a key lookout for that one. It's really important because I did have some haters chirping up in the comment section in the video that I basically said, hey, I'll sell all my dividend stocks and be able to go fully into cash secured puts and covered calls. And got some hate and chirps up in the comment section, which is understandable. You have some folks that don't necessarily know how options work, just like I did as well. And I didn't touch them for a very long time because of some of the opportunity costs that I had left on the table with, say, Square, for instance, when that ran up originally from $20 to $120 a couple of years ago. First Solar is a prime example where I sold a covered call on that, left some opportunity costs on the table with that one as well. But now that I've understood and tried to understand more about options and how the tools can be utilized, it's gotten a lot better. So anyway, guys, hope this video helps. Shows you guys a little bit about what is going on in the portfolio and how the strategies are changing. And hopefully the video that comes out later this week, if I'm able to get around to it, because I hopefully record 3-4 videos today. Am I going to be able to edit them all? I don't know. Sorry, my voice cracked there. But hopefully that video later on will clarify a little bit about the strategy that I will utilize to incorporate options, but remain diligent about the dividends of the portfolio and how they can help me retire as soon as possible. So anyway, guys, hope that one helps, and I will talk to you guys in the next video. Cheers.